Srivastava. Is he ready? Let's connect with him. Hello.
Good morning.
You are nicely decked up, even though it is summertime, wearing a jacket and black, ready to party early in the morning. Friday morning, Friday night, no Saturday night, no Friday night. It is Friday morning now for Ajay Srivastava. Markets are so good.
What more can we ask for? What more
Markets
can
are
we
so
ask for?
good.
Tell me this. What more can we ask for? Life?
Yes. Life is good. Markets are good, right? Nobody can complain. But will markets remain good?
Sorry, Nikunj.
No, markets are good, but will they remain good?
Okay, let me put it this way. We can have a debate on many things about the market, but one thing intrinsic in this market is the strength of the buying which is coming from Indian PMS, Indian investors, and so on. I think that's a big pillar. One I can't ignore it. Whether we like it or not, in terms of pure demand for equity, it's a serious bull market continuing in this scenario. Irrespective of whatever happens, they do what they want to do. And the proof is that companies which are growing at less than 5% retail are quoting at a P of 100 plus. Now imagine, Nikunj, I want to go to the market and today I buy a company with a P of 100 who's growing at 5%, maybe going at 20 also, doesn't matter. And that tells you it can be irrational bull market, markets can be irrational, people can be irrational, they pay the price eventually. But the fact remains that there are in this economy, people are buying stocks left, right, and center at P above 50. What more can one say about it? One should enjoy the ride, but be careful that you are not the one left in the party standing when the music stops. And I think that's the crucial point here, that in this environment, you got to be very stock specific. If you want to play with the 100 plus Ps, you got to be very careful. This is money to lose, money to burn. I would say spend your money sensibly rather than burning the money, because 100 Ps end up in a disaster ultimately for investors.
So not everything is at 100p, right? I mean, it's only the so-called halo digital company, a few defense names, some consumer names are still not 100, but yeah, I mean 70, 80. So not everything is at 100 times or 70, 80 times.
Two retail companies, Nikunj, India's two leading retail companies are at a PE of 100 at this point, plus 100 in fact. And one is selling on normal goods, which is at P of 100 ordinary. One sells clothing, and that's at 125 P. Now, defy my logic, defy what it is. Well, the share price can still go up. But two retail companies selling at a P in economy at 6% with the demand falling and growth in one company at 5% is 100 plus. That tells you most companies, most decent companies are at P's of above 50 at this point of time. How do you sensibly load them up? What you have, you're enjoying it. Luckily, our age is in our favor that we bought our stocks, luckily, at a time when they were cheaper. But today, the Indian stock market, the Indian mutual fund industry is sitting on a stockpile of stock with a valuation upside which is just beyond any growth parameter of the economy. And that lies the risk. So, as I said to you, being age, we are a little benefit of. But people who are investing today, I think, have a tough time going to be for 3-4 years how to make a return. One big downturn, and you saw what happened in the last 6 months, can wipe out your 2 years return. So older people are having a good time. Younger guys, gear up. You need to be a lot more alert as to what's happening.
Every time Ajay with you, you remind me that I'm on the wrong side of 40.
40, man. I would give anything for being 40.
Shrishti is not in her 40s or 30s. What should Shrishti do? You can see her on the
60s is 20s, man.
No, Shrishti, not 60s.
Srishti.
Good morning.
Srishti doesn't count. She's in the baby section of the market at this point of time. She has all the luck and everything, in her favor. It's the middle guys who are in 30, 40, they're in trouble because their retirement is almost imminent and they will get retired before 50 and they need to put a corpus there. For her age, the government will look after her, not to worry.
Oh, but Ajay, the comments that you have been making, everybody is wanting, like you were also saying that the age is a number, and it's really not sounding that great, at least to me. But For us, for a generation of us, give us some sense that where do you find value in terms of the valuation? Not everything is looking that expensive, and there are some sectors which trade at a lower P valuation, maybe insurance, maybe some metal counters, auto stocks have corrected. Any such pocket that is looking good at this point in time, giving that comfort, or you believe that even there the valuations are a bit stretched?
No, I think, selectively, you're right. Absolutely, seriously, there are companies which are growing well and they're going well. But you asked the question that what are the sectors in India which quoted low Ps? And I'll tell you the sectors. Look at a cotton yarn. Lowest P, it's a globally largest company, quotes at a historically low P, phenomenal cash generation. Nobody wants to buy the stock. If you look at the paper industry, it's the same story out there. Nobody wants to buy those stocks. They're orphan stocks, absolutely. Good profits, good cash, but nobody wants to buy. It remained low P, it's been low P, have been low P forever. So if you look at sugar industry, it's the same story. It's a low P industry. So I'm not necessarily saying low P is what one should look at. But the fact is, correlate with the growth rate. And in that, you ask which sector in India, India's auto sector, I think, is the greatest sector because the ecosystem of auto ancillaries, local demand put together make us the number one hub in the world today for autos. You can't ignore auto supply chain in the world without putting India into it. And we are buying lots of European companies. European companies are all dying by the hour, or family groups are growing older. So auto as a one segment, I would say certainly auto and engineering, India is going to be the biggest strength in the next 5 to 10 years. And you got good companies there, select companies there. Some are cheap, some are expensive. But this is one sector you can bank upon that they will achieve global dominance, if not already done so. Whether it's an end user, two-wheeler industry, or auto ancillaries, they are phenomenal. This infrastructure ecosystem cannot be recreated by any country in the world, and so is the engineering sector. So I think there is a great demand, great focus. But as you always say, an Indian investor loves to buy what sells in India. It's done well for itself. And therefore, look at the Indian sector. Our hotel sector has done phenomenally well, continues to. And in 2 years' time, it will see an overexpansion of a kind you will not see. So if you're buying hotel, you got to be careful. You exit in a year's time because suddenly there'll be some 3,000 hotels coming into the picture at that point of time. The medical industry, the hospital, one of the large investments are in hospital industry, I think constitutes the best place to be. Not very low Ps, but significant growth, local, domestic. We all getting older. We all need hospital. Government is not spending money. So if you look at auto, hospital sector, hotel sector, these are core to India. They will do well. Sometimes they will have pockets of problems, but ultimately they will stand out and do well. And as you said, Nikunj said, e-commerce companies. A lot of companies have come on age. You've seen how they change the profile. Loss-making companies like Myntra, etc., gone into profits. So e-commerce is coming of age. If you're not part of it, I think you will be left behind because this is one sector which will continue to thrive and grow. Now, valuation concern, yes, but you can't ignore them at this point of time. That's the way the world will interact. IT has paid the price of no innovation, and I don't think Indian e-commerce is going that way. I think they will innovate well. So compared to IT sector, our great bellwether, who took dividends home but did not reinvest. Now, that's a lesson for the Indian entrepreneurs. If you don't reinvest, you don't survive. Look at the Indian pharma companies. They're struggling today because they did not reinvest sufficiently. They're trying to do now, but they're doing it. But reinvestment is the name of the game. E-commerce is innovating. So I think you've got various sectors you can bank upon and see a good return from capital. But traditional sectors are not the ones who are going to give you the returns. And that's the change of paradigm.
If I do a word cloud up for today's interaction, you've really emphasized on 3 words: age, retirement, mature businesses. I don't know why, just a coincidence, right?
Oh, yes, because I tell you, we get obsolete if we start investing in cement and steel again. That's the worst thing because we knew cement, we knew steel, doesn't mean we need to invest it. You shouldn't have a portfolio investment in anything called cement or steel, in our view. They're not growth industries. They are pedantic, everybody is expanding. It doesn't take genius to put up a kiln and start producing cement. Anybody can do it, literally speaking. So, but nobody can put up an overnight. I'm not saying buy the stock like a Zomato. You can't put up an infrastructure like Swiggy overnight. That needs innovation, and you need to keep innovating in the companies. Engineering companies, some are doing phenomenal job in terms of turbine blades, etc. That everybody can't go and make it tomorrow morning. So differentiation is when we grew up, our paradigm was asset building, steel, cement, and all those things were the favorites at that point in time. Those should be shunned from the portfolio. Don't listen to anybody. They may have the best prospect, price may go up, but those are not the stocks for you. That's not the future. The future lies somewhere else. And therefore, I say, with age, if you retire, people who are still with cement and steel have retired from life. You've got to embrace what's new, and that's where you rejuvenate yourself.
You bought Vedanta in the past. I think you've also traded in and out of oil marketing companies. What happened to this whole dividend theory of yours? Because I think we've discussed this couple of quarters ago, that go for companies which have high dividend yield, like a Coal India, Vedanta. Are you still a votary of that buy high dividend yielding stocks theory?
I am still holding Vedanta. For years, I've been holding, and I keep holding it for the simple. I'm not recommending it, please. It's just because the dividend itself has made like equity zero at this point of time. And again, I don't believe you can duplicate this company, because if you have the mines, you can't go and open another mine overnight. It took 10 years to activate a mine. Yes, prices will go fluctuate up and down and so on and so forth, but the returns have been absolutely phenomenal. And Nikunj, the beauty is not only just equity. If you look at the REIT that India has, Power Transmission REIT, okay, one of them, which is a private sector, that's done a phenomenal job. The price at 100, it's at 150, and it's given dividend every year, and it keeps going up year on year. So dividend yielding stocks, REIT equivalents, have given phenomenal return through thick and thin. And I think they are great investment as you go forward, because they take away the volatility. And whether you like it or not, once you have the mine, you have to just go and dig and just sell it. Price may be up and down, but you don't need to buy a new mine every morning, unlike a plant and innovation and so on and so forth. So yes, I hold those dividend stocks. They're done well, and I'll keep holding them, because that's a good income which comes. And these guys are going to generate income for not 2, 3, 4 years. They will generate cash for 25, 40 years in a guaranteed way. It can go up and down, but guaranteed cash flow for 30 years, 40 years. Show me a business like that, and I would love to buy it again.
Coal India is another business. Show me a business. I mean, 5% dividend yield. Mines which cannot be replicated. Coal India.
PSU. Yeah, PSU. The problem is PSU. As I keep saying again and again, as a consumer, do I go to bank with the nationalized bank? I don't think most of us do. Do I go buy a PSU product? Most of us don't do it. All right. There's a separate niche for defense. Leave it aside for a minute. That's a monopoly. But really speaking, do you have a BSNL connection? I don't think I have one, right? So nobody I know has the BSNL connection. So, fundamentally investing in a PSU is putting faith that the government can give you incremental shareholder value. When the government doesn't know how to run a business, it should not be running a business at the end of the day. And therefore, it doesn't really matter. It's in a department. Look at oil marketing companies. What's happened to them? They're no more companies. They're departments. They don't change pricing. Oil can go down for $20. They don't change the pricing. Government comes and takes excise and takes it back. So really speaking, if you ask me, PSU commodity companies are not companies. They are extension of government departments. And you don't want to invest in government department at the end of the day. If they were freely floating companies and they could price how they wanted, our OMCs would be valuable. Look at their price to book, Nikunj, is 1 or 1.2. And the asset they've created is phenomenal. The petrol pump, the real estate value, the refineries, etc. Privatize it, they'll be quoting at 5 to 6 times what they are intrinsically quoted today. But being departments, how do your shareholder going to make money out of it? You can't. If the company doesn't increase the price or reduce the price when the demand falls, how do you make money? So I think it's the PSU tag which is the problem, and I stay away from it most of the time.
That you have been liking, Ajay, I believe, is the defense pack, and off late we are seeing the defense companies doing very well. There too is a lot of this technology upgradation is happening, and recently with the tensions across the border, we have seen now drones are the way to go. Give us some sense, how are you looking at the growth outlook for the defense counters?
I think it's good. Definitely it's good, because I think government allocation will also go up. Defense has to go up given what's happened to the borders of ours. It's good for Indian companies. Again, they're not so cheap companies. All are P's of 80, 90 and hundreds at this point of time. But they have a path to catch up. Perhaps they will catch up in 3 to 4 years' time. You may go wrong with investing now and repent in a year's time. But the fact is they have a good future. Now, the drone thing which is going on in this industry, I have at least on my desk, I can tell you 100 prospectuses lying of companies who make drones or want to make drones. So I'm not sure who's going to be the winner or loser, but I can certainly say that the existing private listed companies of defense sector have a clear edge in the market. And that's the place to be. But as I said, there are so many new players coming in. On top of that, there is a global competition. We are not the best globally in terms of the product at this point of time. So locally, yes, we can buy some. So I would temper down to say only one, that the hoopla comes before you commit your cash, and therefore be careful of what the cash will end up doing. Uh, Lots of companies will do well, but the results are not showing so far. It's a long process in government to be impaneled, to get your product certified, to get it tested, get an order, get delivery, and book revenues. That cycle is 7 years plus. So even if there is a lot of hoopla around, drones will be bought, newer companies will need 7 years life cycle for the first product to be inside the defense establishment. So be careful. Defense timelines are very long and very complex in terms of buying behavior. So short term, yes, uplift, but long term, be reasonable. These orders don't come overnight.
All right, Ajay, so good having you on the show today. Thank you
Thank you
so
very
much.
much. You have a good day.
Thank you so much, and same to you.